In the vast world of finance, there exists a behemoth that wields unparalleled power and influence, yet remains relatively unknown to the average person. This enigmatic entity is BlackRock, the largest asset manager in the world. With assets under management worth trillions of dollars, BlackRock has a significant impact on global financial markets and the economies of nations. In this comprehensive article, we will delve into the depths of BlackRock's operations, uncovering its fascinating history, its extensive reach, and the implications of its immense control over financial resources. The rise of BlackRock. BlackRock emerged on the scene in 1988, founded by Larry Fink and a group of influential individuals from the financial community. Their vision was to create a company that excelled in risk management, a crucial aspect of navigating the complex world of investments. Backed by the Blackstone Group, the company initially operated under the name Blackstone Financial Management. However, due to differences with the Blackstone Group, BlackRock eventually went its separate way and rebranded itself in 1994. From its humble beginnings, BlackRock experienced exponential growth, attracting substantial investments and expanding its reach. By the late 1990s, the company's assets under management had reached billions of dollars, laying the foundation for its dominant position in the financial industry. The enigma of BlackRock's ownership. One of the most intriguing aspects of BlackRock is its elusive ownership structure. Despite its massive size and influence, uncovering the true owners of BlackRock proves to be an arduous task. Extensive research and investigations have yielded limited information, leaving many unanswered questions. This opacity adds a layer of mystique to the company, creating an air of intrigue surrounding its operations. Unveiling BlackRock's dominance 1. Controlling trillions in assets. BlackRock's ascent to becoming the world's largest asset manager is nothing short of astounding. As of January 2022, the company manages a mind-boggling $10 trillion in assets, surpassing the GDP of all countries except the United States and China. This immense wealth places BlackRock in a league of its own, solidifying its position as a global financial powerhouse. The sheer scale of its assets underscores the magnitude of BlackRock's influence over the world's economy. 2. A media monopoly. Despite its vast wealth and power, BlackRock has managed to maintain a relatively low profile in the public eye. This can be attributed in part to the company's strategic investments in major media conglomerates. BlackRock, along with its counterpart Vanguard, holds significant shares in media companies such as CNN, CBS, Fox, Disney, and Comcast. This significant ownership allows BlackRock to shape narratives and control information dissemination on a global scale. The editorial authority it potentially wields raises questions about media independence and the potential impact on public discourse. 3. The fourth arm of government. In times of economic turmoil, the influence of BlackRock becomes even more apparent. During the 2020 global recession triggered by the COVID-19 pandemic, both the U.S. government and the Federal Reserve turned to BlackRock for assistance in stabilizing the financial market. The government and regulatory bodies sought BlackRock's expertise and software to access crucial financial data. This partnership, while intended to restore stability, also raises concerns about the close ties between BlackRock and government institutions. Critics have labeled BlackRock as the fourth arm of the U.S. government, highlighting the potential conflicts of interest and the concentration of power in the hands of a private entity. 4. Common ownership and competition. Competition is a cornerstone of a healthy economy, fostering innovation and driving businesses to excel. However, BlackRock's extensive holdings in various companies blur the lines of competition. Through its investments, BlackRock often owns shares in competing businesses, raising questions about fair competition and potential conflicts of interest. This practice not only consolidates BlackRock's influence, but also impacts the dynamics of industries and the ability of companies to operate independently. 5. Privatization of pensions. BlackRock's influence extends beyond investments and ownership. The company has actively advocated for the privatization of pension schemes, promoting the channeling of savings capital into its funds. The support for privatization has significant implications for individuals' retirement, security, and the broader economic landscape. The concentration of pension funds under the control of a single entity raises concerns about the potential concentration of power and the impact on individuals' financial well-being. The consequences of BlackRock's dominance. The immense power and influence wielded by BlackRock have far-reaching consequences for companies, economies, and individuals worldwide. While the company's expertise in risk management and its role in stabilizing financial markets cannot be overlooked, the concentration of power in the hands of a few raises legitimate concerns. 1. Impact on competition and executive pay. BlackRock's extensive ownership across various industries raises questions about fair competition. When a single entity owns shares in competing companies, the incentive for active competition diminishes. This lack of competition can potentially lead to inflated executive salaries, as executives may be disincentivized from aggressively competing against companies owned by their own shareholders. The consequences of reduced competition can stifle innovation and limit consumer choice. 2. Influence over government affairs. BlackRock's close ties to government institutions and its role in shaping financial policies raise concerns about potential conflicts of interest and undue influence. The revolving door between BlackRock and governments, with numerous former officials joining the company, raises questions about regulatory capture and the blurring of boundaries between private capital and public affairs. The access and influence BlackRock has over government decision-making processes warrant scrutiny to ensure the preservation of democratic principles and the integrity of governance. 3. Geopolitical implications. Given BlackRock's global reach and influence, its actions have geopolitical implications. The ability to direct narratives and influence media conglomerates worldwide provides BlackRock with significant soft power. The potential to shape public opinion and influence geopolitical dynamics raises questions about accountability, transparency, and the potential concentration of power in the hands of a few. The future outlook. As BlackRock continues to amass assets and expand its influence, the implications for the global financial landscape are profound. The company's ability to navigate economic crises, shape public discourse, and influence government policies raises important questions about the role of private entities in shaping the world's economies. The need for robust regulatory frameworks, transparency, and accountability becomes increasingly paramount as the dominance of companies like BlackRock persists. BlackRock's rise to power has made it the epitome of a shadowy giant in the financial world. Its immense assets, strategic investments, and influence over governments and media conglomerates raise important questions about the concentration of power and the potential impact on competition, governance, and public discourse. As society grapples with the consequences of BlackRock's dominance, it becomes crucial to strike a balance between economic growth, accountability, and the preservation of democratic principles.